Morning, everybody. My name is Chris Van Dome, and I'm a research fellow with the Africa programme at Chatham House. And I'm absolutely delighted to welcome you all this morning to our webinar on Zimbabwe. This morning, we will be looking at the topic of Zimbabwe's economy during the coronavirus pandemic and beyond. We've got a great selection of speakers that I'll introduce you to shortly. But first, I'll just give you a quick run through of how today's session is going to proceed. I will first invite Knox Chitio and David Mbaye to welcome you all on behalf of both Chatham House and Konrad Adenauer Stiftung, who are partners on this event. And then I will introduce the other speakers and we will listen to the four panelists before going into a Q&A session. If you'd like to raise a question during the question and answer, you can use the raise hand function on your Zoom platform, and I will come to you in turn and you'll be able to ask your questions. If you have questions that you want to get out of your head before we go into the Q&A, you can use the Q&A box also on the Zoom platform. I'd like to remind you all that this meeting is going to be on the record and we will produce a video of it afterwards. You can tweet the meeting using the hashtag #CHAfrica, and you can also follow us on Twitter with our handle @AfricaProg. So today we're going to be looking at Zimbabwe's economy during the coronavirus pandemic and beyond. COVID-19 has had a devastating effect on Zimbabwe's economy. Important foreign currency earnings industries have virtually stopped and key supply chains have been disrupted. Across the country, livelihoods are at risk and an increasing number of people are reliant on government grants. Businesses are having to become more flexible, but are also constrained in a policy environment and a lack of confidence in the economy. Since 2017, the government has been pursuing an economic reform agenda and Transitional Stabilization Programme, and the deepening challenges of the coronavirus pandemic have accentuated the need to accelerate economic reform and build confidence in a recovery. So without further ado, let me pass on to Dr. Chitio, who will welcome you all on behalf of Chatham House. So Knox, please.
Hello there, good morning everyone. And on behalf of Chatham House, I'd like to welcome you all, wherever you are in the world, whatever time it is. Really like to welcome you all to this webinar on Zimbabwe's economy during the coronavirus pandemic and beyond. We are delighted to be hosting this event, and we're delighted to have such distinguished speakers with us. I'd just like to say a few words, just first of all, just say a few thank yous, and then to give a further context to today's discussion. So just in terms of thank yous, as Chris said, we'd like to thank David and Cass for their support and partnership in this event and with other Zimbabwe economic dialogue events which we've hosted before. I'd also like to thank our steering group who have been advising us on what would not just be an interesting topic, but also a useful topic. We have our steering group who are in Zimbabwe and some of them are outside, so thank you all. You know who you are. I'd also like to thank you all, wherever you are in the world, for listening and watching this webinar. We're most grateful. And I think since this is a Zimbabwean event and I'm a Zimbabwean, I'll just take the opportunity to thank in our Zimbabwean way, which is what we say, it's no tender, in Ngiyabonga, as we say in our languages. Just very briefly, as we all know, 2020 has been a bad year globally. COVID has impacted on health and livelihoods. And it has been a very, very difficult situation, and Zimbabwe has not been spared. So it has been very, very difficult. The economy, even before COVID, Zimbabwe's economy was facing headwinds, and COVID has, of course, exacerbated some of the challenges that Zimbabwe is facing. So it's a very difficult time. There may be a few things which perhaps are sort of some rays of light, for instance, in terms of diaspora remittances. the thinking earlier this year was that diaspora remittances would be catastrophically impacted. They have been impacted, but not so far, touch wood, not as badly as has been thought. And there are still some ongoing investments and initiatives happening in Zimbabwe. In addition, the formal and informal sector has found ways of adapting and adopting to the new normal of COVID economies. We're seeing new technologies, we're seeing new ways of doing business, we're seeing new ways, new types of business. So within the overall picture, which we can't put a gloss on, it's a very difficult, challenging picture. There may be one or two things of interest and positivity which perhaps we can talk about, but overall it's a very difficult situation. We are most grateful to all our speakers, Sister Karen, Ethel, Wisborne. Thank you so much for making time to join us. We know that you are incredibly busy, so we really appreciate you taking time to join us, and we very much look forward to hearing what you have to say. As a Zimbabwean, I am very, very happy to have Zimbabwean voices at Chatham House. It's something that I really do try to promote, voices from across the various spectrum. So we're very happy to have you on board. So without further ado, I'd like to now hand back to Chris and then hear from David as well to continue the meeting. Thank you.
Mox, thank you very much. I'll now hand over to David Mbeni to say a welcome on behalf of the Konrad Adenauer Stiftung. David is currently serving as the country representative of CAS in Zimbabwe, and he's held that position since 2016. So David, please introduce yourself and welcome everybody on behalf of CAS.
Yeah, thank you very much, Chris. Good morning to you all. As Chris has already said, my name is David Mbeni, and I'm the current country representative for the Konrad Adenauer Stiftung here in Zimbabwe. For those of you who are have not been encountering us as an organization, we're a German political foundation affiliated with the Christian Democratic Union. And we have been working in Zimbabwe since the early 80s, working on several issues, starting from democracy promotion, rule of law, sustainable economic development, as well as environmental issues. We started this process with Chatham House almost 2 years ago, where we decided that we should start a project that focuses on a Zimbabwean voice when it comes to economic growth and how we can get an agenda set in terms of policy recommendations that would then benefit the economic development in Zimbabwe. So we started this process last year with a roundtable series that focused on a broader picture about the economic development of Zimbabwe and looked at the different important sectors. And this year, and this is the continuation of this process, we would like to find more low-hanging fruits, so to speak, and look at more specific areas on where we could then benefit this process. And I'm very happy and I'm very thankful for our speakers that are joining us today, and obviously also to everyone in the audience who's interested in this process and who would like to know more about it or even contribute in their own way. So I'm very much looking forward to our discussion today, and I would invite everyone to get in touch with us when you're interested in the aforementioned topics that we are working on, and also when you're interested in the paper that came out last year that already talks about the broader picture that was established during our roundtable series, which is called Forging Inclusive Economic Growth in Zimbabwe. So yeah, feel free to engage us, and we are happy for getting more voices in order to achieve the goal that we have all in common. So thank you very much, and I'm looking forward to the discussion.
David, thank you very much. So now we'll turn to our panelists. On the panel today, we have 4 speakers. The first will be Busisa Moyo, the CEO of United Refineries and board chairperson of the Zimbabwe Investment and Development Agency. The second speaker will be Dr. Karen Pindariri, who is a senior lecturer at the Department of Economics, University of Zimbabwe. Our third speaker will be Ethel Kuyuya, who's the Managing Director of Advisory K. And our fourth speaker will be Wisborne Malaya, who's the Secretary General of the Zimbabwe Chamber of Informal Economy Associations. So I'll hand over to our first speaker, Busisa Moyo, who, as I say, is the Chief Executive Officer of United Refineries Limited, Board Chairperson of the Zimbabwe Investment and Development Agency, a role that he assumed in March 2020. He sits as an advisor to the Presidential Advisory Council of Zimbabwe and previously served as President of the Confederation of Zimbabwe Industries, CZI, who've been part of our steering group for this discussion. In terms of COVID-19, Busisa is the Chairman and Founding Trustee of I Am for Bulawayo Fighting COVID-19. And he also serves as a regional representative of Solidarity Trust Zimbabwe and Business Fighting COVID-19 to coordinate and mobilize resources for several hospitals and departments. So Busisa, with both your business background and the work that you have done on COVID-19, we're absolutely delighted that you're able to join us this morning. And I'll hand over to you. Thank you very much.
Just want to start my video. Good morning, everybody. Thank you for attending today. I have a presentation that I'm going to share just to help guide the discussion. Really honored Chris and the organizers, Dr. Chitio. Thank you very much for the invitation. I count it as a great honor, and thank you very much to our audience this morning. I'm going to share my presentation. Let's try and do that. So COVID-19 has presented obviously lots of challenges, and it has meant that we've had to rethink on several fronts the way we do business. I'm a private sector person, but assisting a little bit in the public sector. Zimbabwe Investment Development Authority is a new baby in Zimbabwe. It's the amalgamation of three entities, primarily the Zimbabwe Investment Authority, the Zimbabwe Special Economic Zones, and the joint venture unit. So all those three entities have been brought together under one umbrella called the Zimbabwe Investment Development Authority. And I'm the chairperson of the advisory board for that entity. And that's the work we do in public sector. So I start, as far as the topic is concerned, the topic at hand, and I want to get straight into that. The COVID-19 pandemic presents an opportunity to rethink and reimagine new possibilities. And I know that sounds like a cliche, but for Zimbabwe in particular, it does present opportunities for us to think in other terms, as long as we are willing to be flexible around the issues and challenges that we face. And I think some of the opportunities that we see are within Zimbabwe itself, but a lot of them are to do. Zimbabwe is a small country in market terms. However, if we talk of where it's located on the subcontinent, I think it does present a lot of opportunities that we can, if we are flexible enough to think in other terms and sort of to undo certain stereotypes that we've become accustomed to, can yield some results for the economy. Technological adaptation is a very important aspect, and Zimbabwe being very much a front runner in many ways in ICT. We have high mobile penetration for a developing country. Likewise, internet penetration north of 50% is quite high and presents opportunities if we start to harness those and bring it together with our traditional models to deliver value as corporate sector and as private sector. Supply at a national level, but also for commercial entities operating within Zimbabwe, I think there are opportunities there. And I want to talk just briefly about how I see some of these opportunities, and what I'm going to present may sound generic, but I'd like to certainly use the notes for us to to talk through a few issues. So we have a business culture in Zimbabwe that's, it's colored by a lot of background challenges, corruption, and issues similar to that. And that business culture, I think we have had challenges even around the COVID pandemic itself, the perception of donors and etc. And certainly there is a business culture that Zimbabwe was sort of on a trajectory going towards a certain direction. But I think there's an opportunity to change that, to address some of the real issues that are at hand. And I think things like social entrepreneurship present opportunities for us to get into. The entity that Chris mentioned, I'm for Bulawayo, is philanthropic in nature, but we've seen a lot of space where social entrepreneurship among the youth in particular can start to address some of the fundamental issues of unemployment and the like. So the way business is structured and who gets into business, the environment supporting business people, in particular entrepreneurs, to address real needs that are in the country. The business models that we've used before, most corporate entities, you will find that we were focusing more on local because Zimbabwe is predominantly dollarized. And so since 2009, the local market has presented better returns than exports. But I think for us to develop our corporate sector, our agricultural sector, certainly tourism, one has to look beyond just the immediate market, being the Zim market. And I think that's where the real opportunities lie. And I think that's where resilience is going to come from. COVID-19 has taught us that, when countries have difficulties or in the face of pandemics such as COVID-19, countries or sub-regions tend to shut down. But we, for all intents and purposes, have remained open to trade with Zambia, with Malawi, South Africa, and our neighboring countries. And so there is scope for integration and looking at value chains that straddle across countries to create value for corporate entities, for business, and for the country as a whole. I think that, Africa doesn't trade enough with itself. So I raise the issue of customers and non-customers in that light to say that we need to be looking at the customers that our corporate sector is serving in Zimbabwe. And in particular, the issue of Brexit comes up, the issue of the Africa Free Trade Area comes up as opportunities to create new customers for corporate sector in Zimbabwe, for agricultural produce in Zimbabwe. Just in a conversation yesterday, we're talking about some of the more specific agricultural produce going into markets that are further out. I can case in point is citrus, for example, that has opportunities in markets that are further afield. And why not take advantage of the Africa Free Trade Area and look around Brexit, a subject that we have spoken about before in this platform, about what links can we create between the private sector in Zimbabwe and private sector in the UK, and what alliances, what opportunities for alliances exist, and not just transactional in nature, but maybe more relational, building relationships with businesses in Zimbabwe so that you have some synergistic connection that is more long-term. And most of what we've done has been transactional. Trading, you sell products into a particular market. But I think there is scope within the region, and partners like the UK, China also presents interesting opportunities from a consumption point of view. I'll talk briefly about ICT. This was a very broad topic, and I was trying to cover it all. But I think that there's certainly linkages across value chains. Those present big opportunities for us in Zimbabwe. And I share something from the World Economic Forum. They just pulled it out just to show that, you know, ICT adoption is still pretty low. And I think there is a lot that can be done to leapfrog farmers, for example, linked to businesses. And then there's scope for solutions. You will find that pricing of agricultural produce, that's my sector, so you'll hear the word agriculture coming up very often, but linking farmers or primary producers with processors and manufacturers can create value, can create efficiencies that would, you know, be of value to the end consumer and create value for the country and probably an area for economic growth. After having, I mentioned the internet penetration that we have, which is fairly high, cellular penetration is also very high, or at almost 100%, but we haven't leveraged those statistics and those realities for value. And I think that's where the opportunity is in using ICT, integrating it into business models so that value is created. And that's across the corporate sector, from tourism to mining to agri-processing and similar industries. I think that Zimbabwe is well endowed with human resources. We always talk about this, but I think that again, that talent or those skills need to be leveraged for value and to create value. And so we've been talking about issues of call centers in Zimbabwe, in particular addressing issues to do with the youth. And we know that call centers, back office accounting, taxation services, we have some of the best accountants in the world. We export, whether intentionally or unintentionally, to South Africa, to Botswana, to the region. But you see, it's individuals. It's not formatted into a business model that the country could adopt to share value and to share talent with the rest of the world and create benefits for Zimbabwe. So talent management and creating teams. Here we are talking on via Zoom and so on. We've had to change formats. And I think that accounting, banking services, Zimbabwe can provide for the region and beyond skills to assist in that area. And then talk a little bit about supply chain and you know, this is a generic presentation that you will see in a lot of places. But what I wanted to point out was the gap that I see, the big gap, and I'll highlight it just one more time to say that with the ICT levels that we have, we can actually leverage those to create advantage. In particular, we buy soybeans. The business that I'm sitting in and talking to you from is a soya processing plant. We produce cooking oil and stock feeds, protein feeds. And we found that using technology can assist, whether it's outgrowers, you know, forward integrated partners in the business, in the value chain, and backwards. I believe that ICT opportunities, and this applies, this is just an example of what can happen and what is possible in having a demand-driven supply chain, but that demand-driven supply chain is also ICT linked across the value chain. And you will find that you have efficiencies that come through there because of the information flow. So I just end by saying I've touched on a few things, just as teasers, really to bring out certain points that I believe will be important as we talk about value going forward and the opportunities in a post-COVID world. I believe it gives us a duty and a responsibility to be and to build resilience beyond just being competitive. So I think that internally and locally, Zimbabwe, our duty is to feed ourselves. We still import over 60% of what we consume. And yet we have a lot of arable land and we have dams. We have 10,000 dams, well endowed in terms of water bodies, but we haven't harnessed those water bodies. So it's subjects like that that we will be looking at going forward to see how we sate the consumption levels, food, primary base of the pyramid needs, to satisfy those needs locally and build resilience as an economy. Because if we are still importing 60% of our food requirements, it will be difficult for us to attend to the other areas, because most of our foreign currency will be going towards food imports in large numbers. Thank you very much, Chris. That's the end of my presentation.
Sisa, thank you very much. It was a very informative presentation. I think touching on some of the key issues of high levels of internet penetration within a consumer base, and looking at some of the opportunities for translating that into greater use of ICT and technologies within supply chains. Also, really important points around some of the regional integration and the impact of the Africa Continental Free Trade Area. And perhaps we might get a question around Zimbabwe's past experiences within SADC and non-tariff barriers might crop up during the question and answer session. So on to our next speaker, Dr. Karen Pindariri, who is a senior lecturer and researcher at the University of Zimbabwe in the Department of Economics. He holds a PhD in economics from the University of Zimbabwe, and he specializes in development, growth, trade, environmental and agricultural economics and policy impact evaluation. And Dr. Karen Pindariri has recently written, I think as yet unpublished, but drafted paper around the currency situation in Zimbabwe, and he's going to share some of his initial results with us here this morning. So, Dr. Pindariri, please, you're very welcome.
Thank you, Chris. Morning once again. Yes, thank you very much for saying its initial results. Definitely, they are preliminary results I'm going to share with you, with the team. But can you allow me to share my screen right now? Right. The paper is on it's investigating whether monetary targeting is sufficient. Is a sufficient exchange rate stabilization strategy. That's so. I'm going to look at about three main issues here. Basically, it's about the research. I will look at the research issue. Sorry, right? The research issue. Why we decided to look at drivers of exchange rate in Zimbabwe. I'm going also to look at the data and then probably the conclusions and the results. So you allow me to leave part of maybe the empirical strategy because it's too econometric. So I might just say some points there, very few points, but not a lot. So this is how we started we decided to look at the topic, the drivers of the exchange rate in Zimbabwe. What exactly is causing the variation or the volatility of Zimbabwean exchange rate? We had some about at least 3 monetary regimes in Zimbabwe over the past decade. So the first one being the multi-currency regime of 2009. And then after that, we had a de facto local currency introduced in 2016, commonly known as we have what was referred to as bond notes, very popular among Zimbabweans. Then we have also the introduction of the local currency that was in 2019. We reintroduced the local currency, the Zimbabwean dollar. So following the introduction of the Zimbabwean dollar, we have seen an increase or excessive depreciation of the local currency since the first quarter of 2019 until now. So the currency has been, the local currency has been very unstable in the exchange rate. Has been very unstable. But you will find out that under this instability, we have been recording some improvements in the macroeconomic management, especially in the fiscal balance and the trade balance. So we're saying, but with these improvements, why is the local the exchange rate continuing to be very unstable, right? And therefore, the paper decided to look at the factors that are driving the exchange rate under conditions of stability, especially if we look at macroeconomic factors or variables like the fiscal balance and the exchange rate, right? About the theoretical framework, this one I can just take some points here, especially regarding the Don Bush exchange rate overshooting. This is very important for us if you look at, because in most cases which you are going to see in the next slides, we relate the exchange rate to developments in the monetary phenomenon. So in some researchers have taken the exchange rate or variations in the exchange rate as a function of developments in the money supply. And we have seen also Don Bush saying, right, if we change money supply, we increase money supply, yes, we expect the exchange rate to increase, but it can increase by a percentage greater than the increase in money supply itself. Why? Because of issues to do with the confidence, etc. So these are the factors that we looked at: monetary, and we have also seen that besides money supply or monetary variables, the exchange rate has been said to be explained by factors like trade openness, and also factors like fiscal balance, fiscal variables, government expenditure, and so on. So in this view, we tried to look at what we call a blended model, trying to blend or to combine all these variables to see which variables are driving the exchange rate. Is it monetary variables? Is it the physical variables? Or both variables have an effect or a significant impact on the exchange rate? So in this research, we combined all these variables and to come out with what we call a blended model, where we look at the effect of monetary policy, money supply, the effect of physical variables like government expenditure, fiscal balance. We looked also at the different components of government expenditure, their effect on the exchange rate, and also the trade variables. So data, you'll see that our exchange rate started since 2009, where in 2009, our exchange, it was more like one to both were using the US dollar as the main trading currency. So during the multi-currency regime, the exchange rate was almost, it was a US dollar, $1 US is to US dollar, because we used US dollar as the main currency. And after 2013, after the elections in 2013, we continued also to use the multi-currency regime. It was we continued to use the US dollar, so there were no variations in the exchange rate. And in 2016, although there was this new currency, the bond note, the exchange rate remained almost stable, or it never varied. In 2016, it was around 1.2 throughout the year. So given that there were no variations before 2017, we started then to look at the factors driving the exchange rate after 2016, which is, so we used the data from 2017 to June 2020, where we recorded some significant variations in the exchange rate. So the data is from January 2017 to June 2020, right? We decided to use monthly data instead. If you look at the previous studies, they on exchange rate and the number of studies on the exchange rate, they use in most cases annual data or yearly data. But we decided to use the monthly data because of the period we wanted to improve the number of observations. Besides that, you will find out that the exchange rate, an exchange rate, especially for Zimbabwe, varies on a daily basis. So daily data could have been better, but now, given that policy variables like macroeconomic factors, they don't change on a daily basis, we then try to have a trade-off using monthly data where you have some variations in macro variables as well as variations in the exchange rate. So, so the empirical strategy, the results we analyzed using descriptive statistics and as well as econometrics. I'm not going to say too much about econometrics, but we simply studied the impact of one variable on the other using econometrics in many cases. So we used descriptive statistics and econometrics. Now, these are the some of the results from the descriptive statistics. You can see here, this is the first graph. Here is the graph of the parallel exchange rate. So growth in the parallel exchange rate from 2017 January up to 2020. It was about up to May. The data was up to May there, and you can see that this graph mirrors the money supply growth, growth in money supply. So the two are trending together. So same as they show the money supply growth is the same pattern as the exchange rate growth. So one can simply conclude that an exchange rate growth or instability in Zimbabwe is a monetary phenomenon because the two graphs, they mirror each other here. But you can also see here, I just included 4 graphs here, but there are so many graphs in the paper, but these are the most important graphs because you can see here, this one is for the fiscal balance. You can see in 2019, there was a significant improvement in the fiscal balance with a positive indeed, revenue exceeding a government expenditure. And also, if you look at the trade balance here, it has been improving, although negative for the larger part of the study period, negative, but it has been improving. And now it's, I think it's positive now. It's improving, showing some signs of improvement, but still the exchange rate is not stable. So that's one of the issues. So the results, the findings, the numbers, I know I will keep the numbers, but I will just summarize what the numbers mean, the results. So the main results or the main findings from the study are that exchange rate in Zimbabwe is largely a monetary phenomenon. You find that it is the change in the exchange rate or growth in the exchange rate is money supply elastic, meaning that if money supply changes by 1%, we expect a more than 1% increase in the exchange rate. So it's very elastic, very responsive to money supply, the exchange rate in Zimbabwe, very responsive to money supply. Try to use different monetary aggregates, reserve money, M1, M3, M2 and M1 are almost similar in Zimbabwe. So M3 and M2 also similar. So we just use M3 because using M3 is the same as M1 in the econometrics findings. So all the aggregates, monetary aggregates, all of them, reserve money, M1, M2, M3, they show that exchange rate movements are a function of money supply. So they are very responsive to money supply. the movement in the exchange rate, very responsive to money supply. But you look at also the impact of the fiscal balance. It was, although it was statistically significant, the figure was very, very small. The impact was very, very small, statistically, economically insignificant as the impact, if you look at the impact. So this, and then from these results, we also looked at, the volatility findings. Volatility, what causes the exchange rate to vary? Remember, money supply, the impact of money supply on the exchange rate, or the previous model gave us what will happen if you increase money supply. How is the exchange rate going to respond to changes in money supply? Then besides in addition to money supply, you'll find out that there is a factor called expectation. Expectation plays a critical role, or affect the exchange rate significantly in Zimbabwe. Expectation, and we relate expectation to it's basically memory, so we relate it to confidence issues as well. So if economic agents lack confidence, and if there is an increase in money supply today, or if there is a shock in money supply, that shock in money supply, yes, can affect the exchange rate currently, but can also affect the exchange rate in the future. So that's what we found out, that memory itself, or expectation, the lagged exchange rate, can affect growth in the exchange rate. If we have depreciation this month, the depreciation can influence and can drive future depreciation as well. So this is about memory. So two main issues are arising from the findings. One is the monetary issue, and also the memory issue, or the expectation issue. So the expectation issue, or the memory issue, is the one that we relate with confidence issues. So if you look at the volatility here, we looked at volatility here. So I just used the graphs here to show that, right? If we relate the exchange rate to money supply, then you find that after the first quarter, just after the first quarter, or during the first quarter of 2019, you can have this large residual in exchange rate growth, which was a result of other factors outside money supply, right? And there was a monetary shock during this period. You can look at the graph number 2 there. There's a huge monetary shock which caused large variations in the exchange rate. Yes.
So, Dr. Pindari, just in the interest of time, perhaps I might request that you have 2 minutes left.
Okay, thank you. Right. Also, let me summarize. Right. The main factors driving the exchange rate from these graphs, you can see, is the issue of confidence in lags, and as well as money supply. Those are the main factors. So the conclusions. So Zimbabwe is currently experiencing what we call the Don Bush overshooting of the exchange rate. So the exchange rate variation is above what we expect under the current money supply scenario. That's what we currently have in Zimbabwe. So basically what is driving that is, one, the issue of confidence. These are confidence issues which are driving the exchange rate, which are causing the exchange rate to be above what we expect. And the finding also are showing that this exchange rate can continue, the instability can continue in the next in the short run, but might phase out in the long run. And as long as the government, these are our recommendations here, as long as the government reserve money, as long as the reserve money is kept, is controlled, or money supply is controlled, and then also if fiscal management if prudent fiscal management or policies, prudent fiscal policies are in place, and if the government stick to the current fiscal management style, then we expect this exchange rate to stabilize at between 85 and 95, and to remain at that. So basically, this is what our findings are saying. But let me point out to the fact that we need the findings. From the findings, we didn't look at the duration of this instability, which we are just suggesting as a recommendation here, that we also need further studies to study the duration of this instability, because it's expected, we expect it, as long as the government stick to good fiscal monetary management, we expect it to the exchange rate to stabilize. And at the meantime, it is stabilizing. Also, we are supported by, because it's a tobacco season, so we expect also if we are able to get support, international support, budgetary support, issues to do with budgetary support, then we can sustain the stability of the exchange rate. Thank you.
Dr. Pindariri, thank you very much for a very detailed presentation there. Very interesting to hear there that the exchange rate in Zimbabwe is very elastic. So a small increase in the money supply leads to a greater increase in exchange rate. And you can explain some of the exchange rate volatility, and that this is different to a number of other countries. From what I'm hearing you say, that you attribute that to confidence and memory. And like all good researchers, you have suggested that there is room for a further study there, looking at the history or the length of volatility and the prospects for stability. So thank you very much, Dr. Pindariri. Now, our next speaker is Ethel Kuya, who is the founder and leader of Advisory K, strategy and research firm, and engaged business process outsourcing, working in Zimbabwe and the region. She works across a wide spectrum of sectors, with governments in public sector reform and private sector in transformation and growth. Ethel is a member of the UN Women Civil Advisory Group, and in 2018 she was recognized by the Trans-Montana Forum as an emerging new leader. Ethel, you spoke at one of our roundtables in Harare that David mentioned at the beginning, so we're absolutely delighted to welcome you back to one of our meetings, and very much looking forward to hearing what you have to say and have an update from your presentation last time. So Ethel, thank you.
Thank you so much. Good morning. So you asked me to speak about job retention and reindustrialization. I'm actually going to start with reindustrialization, which assumes to some extent that that was intentional in our case, which it wasn't. So deindustrialization then would have been a loss of competitiveness and a loss of productivity. And in most countries that have intentionally deindustrialized, it would have been a result of outsourcing activity. In our case, that outsourcing would probably amount to migration of critical skills. So what would be key in terms of reindustrialization from my perspective is we need to focus on the pillars that create active industry. And these are the same pillars that would result in job retention. So right now there's a lot of job loss. For obvious reasons, many companies are trying to survive. So I'm just going to speak 3 things about job retention, and I'm going to speak 2 things about reindustrialization. I don't have a slide presentation intentionally. So firstly, reskilling is going to be critical as far as job retention goes. I've heard people talk about when things get back to normal. There's no normal to go back to. And as far as jobs go, what's been interesting is to see organizations shifting from that need to shift from a role focus to skills focus. And this is more showcased when companies have had to just allow what they call essential services to come in physically to work. This in itself has sent strong messages around what are essential services. So it's been quite entertaining to see how certain role-based functions have assumed that they're essential to the business, but we find that actually people who are not in fancy roles are actually the ones that are critical to organizations. So it's going to be interesting to see how organizations change their business models, because they need to respond to a more skills-based workforce. And when we do that, we're also going to create opening for other people to have jobs. So firstly, reskilling is going to be critical if there's going to be any sort of job retention, but that's in the context of the fact that there has already been significant job loss. And this is not just formal job loss. The informal job loss has been quite significant in as far as the period of shutdown goes. And if one small or micro business person was employing 1 or 2 people, 4 weeks of not generating income is heavily significant. And that one person they were employing or the one person they were working with has already lost that job. And you multiply that, and then you go further up the chain. The second thing is that retooling and reskilling are going to be essential for employees who want to not just remain relevant, but who want to retain jobs or find new jobs. So for a long time, there's been a conversation from early 2000s up until COVID hit that they're jobs of the future. Well, those jobs of the future are here now. That future is here now. And I think there was some comfort in speaking about this as something in the distant future. But that's what's happened now. Work is going to be more increasingly remote. Work is going to be flexible. And this is assuming productivity. Some companies across the world are adopting different work models, 80% pay for 80% of the work. So there's going to need to be a change in terms of how we work and how people work. Those organizations that are going to survive and be able to provide jobs have to make early and significant changes. And by early changes, if they haven't already started making changes, they're behind the curve as it is. Business models need to transform right now. So as far as job retention goes, that's really going to depend on retooling and reskilling in the context of reindustrialization. So I'll pan real quick to the aspect of reindustrialization. So there are a few things that are important to the jobs and to the industries, and these are basics. So, for me, productivity, innovation, and competitiveness would be the basis for a strong industry. Those 3 things need some basic things. Access to electricity, power, real critical. Access to technology, data. The cost of data in this country is ridiculous by any measure. And when you take a huge workforce and ask them to work remotely, those are the things that you start to confront. There are countless companies that have had the full intention of capacitating their workforce to work remotely, but the cost is completely prohibitive. The third thing would then be water. So we need power, we need water, we need electricity. I think these, and transportation, those 4 things are going to be critical to any discussion about reindustrialization. And this is not to minimize any of the other factors that are important to reindustrialization. This is just to say we're already operating from a suboptimal base where we are not at the level that other countries are. The other countries that have to survive COVID, for the most part, have got reliable power, water, reliable road infrastructure, and relatively affordable access to telecommunications. We're on the back foot on all of those 4 things. So I think the focus as far as trying to reindustrialize, even if we started to talk about becoming competitive, because that's what's needed to reindustrialize. To become competitive, we're going to need sound infrastructure in that space. Lastly, I'll just wrap up by saying that innovation is key to reindustrialization, which depends on competitiveness, which depends on the strong infrastructure, which will then create the job retention. So I think whilst all the other things we're looking at are critical, as a country, we really need to focus on creating just some basic things. I'll give a simple, very basic example, and this can become more complex as you go further up. Take an employee who uses public transport currently in COVID times. In Zimbabwe, public transport is a serious problem at the moment. Let's say on average, it takes them 2 hours to get to work. They've probably left home by 5 a.m. It takes them 2 to 3 hours to get to work. If they make it by 8, it's a fantastic miracle. The employer is surprised. Likelihood that they'll make it by 9, it's more likely that they'll make it by 9. They have to start making tracks by 4, 3, 4, 5. They have to start making tracks so they can make it back in before curfew. How much productive time have they actually had whilst at work? In the best of times, even the most high performers are productive for 4 to 6 hours in the day. Now imagine this is the scenario with an individual like that. Those that are supposed to be working from home, maybe they're capacitated with data, but there's no power. They have no access to that data. So basically my point is that to reindustrialize and to retain jobs, we have to create a strong basis to allow industry to actually grow on that. I'll leave that there for now.
Ethel, thank you very much for a concise and clear presentation. Really important points there around the future of work is no longer really the future of work, but it's here now. And the key to unlocking some of this potential is productivity, innovation, and competitiveness, which is dependent upon power, data and connectivity, water, and transportation. And some really important points there around reskilling and retooling, which are going to be essential for workforce going forward. So we'll move on to our final presentation. I'm delighted to welcome Wisborne Malaya, who is the Secretary General of Zimbabwe Chamber of Informal Economy Associations, a position he's held since 2008. He's long been advocating for the interests of informal workers since 2002 when he joined the organization. He's been part of the Informal Economy International Task Force team, which pushed for the inclusion of the informal economy at the International Labour Conference in Geneva in 2018-2019 on the adoption of the ILO Convention 190 on the eradication of violence and harassment in the world of work. Wisborne, we're very pleased to welcome you and look forward to hearing what you have to say. So please, Wisborne.
Thank you, Chris, and again, greetings to everyone. Straight away, I will go into my presentation. I hope you are seeing it now. So I'm going to just give some points about the informal economy in Zimbabwe. Part of my issues I'm going to share, it's important for all of us to first understand the role of the informal economy in Zimbabwe at this current stage. One, it constitutes about 85% of the current labor force in the country. And about 5.2 million people are trading in the informal economy. About 65% of those people are women. Before COVID-19, it has been contributing 40% of the country's GDP. So it's no longer like called a sector, it's an economy where a lot of livelihoods are, feeding from. And including some of those who are in the formal sector, they are using the informal economy as a backup to have sustainable income. And also at policy level, there is the issue of SMEs and the informal economy, where SMEs has got some policy support frameworks, whilst the informal economy has always been operating under criminalization. There are three key factors which I think are important to be known on the informal economy. One, there is a lack of political will in our country to support informal economy or SMEs initiatives. And this is resulting in policy inconsistency and non-proper policy development. And the other thing is there is fragmentation of ministerial approaches to support the informal economy, where sometimes one ministry, I'll give an example, the Ministry of Women's Affairs and SMEs Development, which is responsible for issues of the informal economy and SMEs, has got its own approach as far as supporting the informal economy and SMEs. But you discover on another end, say the Ministry of Local Government, it has got its different approach. And these ministerial approaches, they end up fragmenting along the way and at the same time affecting the target group who are the informal economy or SMEs. Then the number 3 point is the issue of criminalization of informal work. And this has resulted in increased poverty and vulnerability to disasters, e.g. this COVID-19. Whenever there is a disaster in the country, the informal economy or SMEs become the target by the government as they try to fight the disaster. The support which is important for the informal economy at the moment, we have been working on a document which we are calling the Informal Economy Agenda. This is just a policy document. We are trying to convince our government to understand the value of the informal economy. And I'm going to share about 5 things under that document. Theme 1, respect and recognition of the informal economy, where we are talking of issues to do with the legal framework to say it should become friendly and accommodate issues of the informal economy as part of mainstreaming the activities which are taking place there. There is also the issue of a need for a development of a national strategy, which focuses on identifying all the activities in the informal economy and making sure they are part of the mainstream, and at the end of the day, decriminalizing the activities in there. There is also the issue of creating a public, private and government awareness on the informal economy so that it's well known in the country that the informal economy is a very key driver of the economic activities which are taking place in Zimbabwe. And also the issue of supporting the online trading programs which are taking place in the informal economy, especially now after the effects of COVID-19. Then there is the issue of theme 2, where we are talking of development of linkages. We have seen of late the formal businesses in Zimbabwe, they view the informal economy as if they obstruct their activities, but yet they also play a role in making the economy tick. So we feel that it's important for an environment that complements each other, where the formal businesses should support the activities in the informal economy, and that will give a new look of Zimbabwe. Then the issue of access to market and infrastructure. I think I talked of the disaster, to say wherever there's a disaster, the main target are the informal economy or the SMEs. The whole issue is because of sometimes the places or the areas they operate from are not conducive. So at the end of the day, they become prone to maybe spread the disaster, be it diseases and so forth. So as a health measure, the government targets such spaces and at the end of the day, affecting the majority of the workers. So it's important to have a biased look on the infrastructure development so that we have secure markets, and we also promote simplification of the tax system and the business registration for people to be within a formal setup. Then we also need to make sure that there is that improvement of the trade facilities. I think now we have gone into the new normal because of COVID-19, where people are now using ICT. We are seeing a number of our informal traders and SMEs also coming into that ICT, but there is need for the more investment in that area so that as many become friendly to use those spaces. Then I'm going to talk about the formalization. This is part of what the government of Zimbabwe currently is talking about, registration of the informal economy. But within this formalization, there are some key things which cannot be ignored, which also play a role under social protection, where we are talking of provision of economic freedom and social protection to informal economy businesses in order to provide sustainable jobs and income for informal economy workers. I think Etho has just shared briefly part of what an informal worker can do. Sometimes they employ 4 or 5 people. And look at this COVID, the way it has come, it means those 5 people and their families, they are suffering now because they don't have a social protection cover in the event of such disasters. So we feel it's important for the government of Zimbabwe to have a biased approach toward supporting such an initiative. Then we have what we call the tripartite negotiation forum, where business, government, and labor meet to discuss the social matters in the country. We feel it's important for that platform to also open up and incorporate the informal economy, because this is a big mass of people which cannot continue to be ignored in economic development processes. And we also talk of access to finance and capital. We also talk of access to profitable markets, and we also talk of access to simplification of registration processes. I think these are very key, especially now when we are talking of the COVID-19. As an organization within the COVID-19, we did an effort to give PPEs, cashback transfers, masks, as well as also some sort of capital for people to restart their projects after the effects of COVID-19. But we are saying if this becomes a national agenda where maybe the government can set up a social fund to take care of the informal economy under a formalization strategy, this will go a long way in improving the operations of business in the country. Then we have the last one, which is the issue of devolution, where we are saying if the devolution process is well taken on board, it will also allow even workers in the informal economy in different provinces to communicate or to build relationship with their provincial structures, which are friendly to their specific provinces, to promote the work of the informal economy. All this will speak to the decentralization of work and also promotion of decent standards of living for all Zimbabweans in a stable economy. I will just conclude by just a few, or there are quite about 8 points, but I will speak maybe just a few of these points to say, it's important for the current environment in Zimbabwe to stop, like our government, we're encouraging our government to stop harassment and criminalization of informal work. Wherever there is a disaster, that's the target group. And when action is taken, it's a harsh action, which is affecting livelihoods. To this day, as we speak, I think there are still needs which have not yet been met as a result of the effects of COVID-19 and the action of the government on the informal workers and the SMEs. And you then realize that now some people, they still need counseling services. Some, they need skilling, which Eto has talked about, because the environment of work has changed. Some used to operate as cross-border traders, and now the borders are closed, so they have nowhere to operate from. So they need skills development to redefine their new way of living. We also have the issue of provision of local authorities with appropriate facilities. I think what has happened, the government has also instructed all local authorities to put up infrastructure for the informal economy. But to this day, not as many of local authorities finished developing those infrastructures. They are white elephants as we speak. And the question is, people will then go back to their old ways of doing work, which are hazardous conditions, and at the same time, they are prone to disaster. We also talk of inclusion of the informal economy organization in decision-making processes that involve their operations or their issues. This is very key. We have seen so many times decisions are just made and declared by the government or systems of the government without the proper consultation of informal economy associations. And as a result, some of these decisions, they become ill-advised decisions, which are having bad effects on the target group. And I talked about the national strategy, but I can also talk about creation of a separate ministry. We have a ministry of SMEs, but we feel the informal economy is the economy in Zimbabwe. It requires a separate ministry which should focus on developing people in the informal economy to become part of the mainstream economy, who contribute to the tax, and also who improve their livelihoods to be part of the decent work agenda. I think I will end the 3 points to say, urge the business organizations to also include the informal economy. My brother who shared for I think the first one or second was talking about business, to say, look at the informal economy players as partners, not as enemies. This is what we want for us to have a better Zimbabwe, especially in the post-COVID-19 era we are talking about. And we are also encouraging that our government should take a very important measure to respect the operations of the informal economy and try to adopt the international instruments. For example, the ILO recommendation 204, which speaks of transitioning from informal economy into mainstream activities, and domesticate such instruments so that we work collectively in developing the country without harming the informal economy and SME sector. Then finally, we also urge all people in leadership positions to make sure, whether in politics, in business, or in local communities, to demonstrate leadership which is cooperating and working together to resolve the critical economic issues facing the nation, which have even worse due to COVID-19. We feel if this approach is taken on board, I think we can start to have a better Zimbabwe, which can slowly subtract all the pressures which are surrounding us. Thank you, Chris.
Wisborne, thank you very much for a very strong presentation, reminding us of the importance of the informal economy, its scale, the need for infrastructure development to support that side of the economy and livelihoods, and some of those key concluding points there, including the point that you raise around the position of the ministry and that there's no ministry at the moment dealing only with SMEs. So we're going to go into a question and answer session now. We've got around 20 minutes, maybe a little longer. I will take questions from those who have raised their hands. As I said, you can use the function on the Zoom platform there to raise your hand. Please, when I come to you, introduce yourself and tell us who you are, and also tell us who your question is for. So which panelist would you like to give your question to? And you can also, if you are having trouble with bandwidth, or you don't want to appear in person, put your question into the Q&A box and I will deal with some of those. I've seen that there's a number already coming through them. So I'll go to those who have their hands raised. The first of which is Caleb Dengu. I know who you are, but please do introduce yourself, ask your question and let us know who the question's for. So Caleb, please.
Hi, Chris. I'm Caleb Dengu from CDF Trust. My question is directed to Usisa. Generally, we've noted in sub-Saharan Africa, we still import $50 billion worth of food items, 4 food items: rice, wheat, soybeans, and meat. And you are a big consumer of soybeans. So soybeans is one of the 4 items which we are spending $50 billion on. How do you build a robust supply chain ordering from Africa? Because this is 50 billion leaving Africa to other continents to actually supply, according to UNCTAD figures. How do we build so that we actually not only produce but supply the rest of Africa? Because this money, this market is there. It is not an imagined market. We are actually importing these goods.
Caleb, thank you very much. Caleb was also one of the co-authors of the paper that was co-produced by Chatham House and Konrad Adenauer Stiftung last year that David mentioned at the beginning. Before we come to Busisa to answer that question, I'll take one other question from Kevin Lowther, who has his hand up. So Kevin, please do unmute yourself, introduce yourself, and also tell us who your question's for. Kevin. Hello, Kevin Lowther, are you able to hear us?
Yes, I can. Can you hear me now?
Yes, we can hear you now. Thank you. Please go ahead.
I've been familiar with Zimbabwe for about 40-some years. If I were a Zimbabwean living outside the country now, would any of our guests encourage me to come back now? And if so, why?
Kevin, thank you very much. I'll put that question to the panel. If one of the panelists wants to answer it, then let yourselves know. And to make it a nice round cluster of 3, we'll take one more question from Simbarashi Chikanza. Simbarashi, if you're able to unmute yourself, introduce yourself, and ask your question and tell us who it's for. Hi, Simbarashi. You briefly unmuted yourself, but I see you're now back on mute. Are you able to unmute yourself and ask your question? Okay, it appears that there might be a difficulty there, so we'll come back to you in the next round. So we'll go to Busisa to answer Caleb's question, which is around Zimbabwe being a big food importer, and what recommendations would you have to help build a robust supply chain within the continent for both production and supply in connection with regional neighbors? So Busisa, please.
Yeah, thank you, Chris, and thank you to my good friend, Mr. Dengu there. I think you raise very important points. Africa has several problems. The first one is what we export is unprocessed. We're still largely raw material exporters. That's our first problem. Why is that a problem? One, jobs. You know, so we are creating jobs for other economies by sending raw materials out. Now, there are arguments for and against, and those that buy the raw materials will tell you, well, you know, I don't want to buy cigarettes from Zimbabwe. I want to buy raw tobacco, because that's the way it's always been. And you know, there's a general reluctance to change from the models that were. But I think, you know, as I saw in Ivory Coast, you know, the work where Ivory Coast used to export 80% raw cocoa, but now you look at their figures, they are exporting 50%, only 50%, and they're working to turn it around. And this is the sort of programming that we need across Africa, you know, so that we are not, whether it's mining, it's agriculture. We've got that challenge, and then in turn we also, because we haven't yet really cracked that there's a link between exporting raw materials and exporting processed products in terms of job creation. But the issue of food, I mean, Caleb, you know, soya bean related imports in Zimbabwe are between $250 to $400 million per annum. It's $250 million. Just soya alone, that's an oil seed. I haven't gone to sunflower, I haven't gone to canola imports, just soya related. So you can see we've got a problem. What is the answer? The answer is to get agriculture right. Primary production, land tenure, getting issues of tenure, and I'm glad government has started working on the issue of resolving issues of contested land which cannot be financed, and so on. But the work needs to go further than that, to a land bank, and I know there's research that's going on there as well, to a land bank, so that we have bankable, transferable title in these form of 99-year leases. Then people can produce. So the answer to your question is, Africa has to get agriculture right, create productivity in agriculture, resource agriculture, and then we will start to see food imports starting to be averted. I said to you that we import over 60%. It's not 60%, it's over 60%, because we only have formal statistics. But if you look at production versus consumption, you can quickly compute. On maize, we're importing 7 months of maize, we are producing 5. On soya, we produce 2 months of soya, local production. The other 10 months we are importing. So this is the makeup of our economy, or our sectoral and microeconomics. And that's where we need to start getting investment in populating these spaces, getting policy right. And I'm glad Chatham House can help us in that regard. Thank you, Chris.
Busisa, thank you very much. So I'm going to go to Ethel, perhaps, to try and convince Kevin that he can return to Zimbabwe. Ethel, are you able to convince Kevin?
Well, I have 3 answers to that. If I was a Zimbabwean, would I come back? For me, I was and I did. But my answers are, firstly, you don't need to qualify if you're a Zimbabwean. You don't need to qualify to come back. So that's the first good reason. The second reason is, if not you, then who? You know, a lot of people wait for things to get better. Having been bettered by whom would be my question. So if not you, then who? And the third thing is that we are the people we've been waiting for. So my answer is always yes. A good time is any time, to the extent that, you know, you are prepared to. So, and there are many reasons why people leave, and I'm not minimizing those reasons. There are many reasons why people stay away, but those would be my answers for why to come back. Most importantly being, if not us, then who? Because nobody's coming to save us.
Ethel, thank you very much. So we'll take another round of questions. I'm going to come back to Simbarashi. Oh, her hand has just gone down. So we'll go next to Mojibulu Okome. Are you able to unmute yourself?
I have just unmuted myself.
Wonderful, we can hear you.
A whole series of questions in the question and answer panel. But you know, my concern about the first presentation is that there's no, I don't have any understanding about whether the scenario that is being drawn is inclusive of the majority of Zimbabweans. How do majority of Zimbabweans get included in this optimistic outlook in terms of access to the resources that they need to be truly competitive? Are there training schemes in place? Is there facilitation of their access to affordable ICT tools that would enable them to participate? Because bandwidth is very expensive in the African continent. I'm a Nigerian, and every time I travel home, I spend majority of my money trying to access the internet and, you know, communicate and all this. So there are very serious infrastructural problems. And the only people I heard addressing them from the perspective of ordinary people are the last two speakers. So to what extent are economic actors across the board able to engage the Zimbabwean government in solving these problems? To what extent are their needs being taken seriously in a way that would enable for there to be democratic access to the economy?
Thank you very much for your question.
I'm a professor of political science at Brooklyn College in New York. It's part of the City University of New York.
Thank you very much. Next, we'll go to Stanford Beatty. Stanford, are you able to unmute yourself, introduce yourself, and tell us who your question's for?
My name is Stanford Beatty. I am the MDC UK and Ireland International Relations Secretary. I'm also academia. I work in the United Kingdom. My question is first to Chatham House that it seems from the both papers which I've read, we are trying to sanitize a regime which cannot be sanitized. We know very well that our issues emanate from a lack of confidence with the Zimbabwean government. We have people like Dr. Knox. I've worked with him on various projects. He knows very well that I'm not even allowed to come into the Zimbabwean embassy. Bosiso can know I've applied quite a number of issues that I should come in and attend at the Zimbabwe. If you apply for anything with Chatham House, which is being hosted by the ZANU-PF government, you are actually told that you don't control it, somebody controls it, which is, it leaves a lot of Zimbabweans out of issues pertaining our country. So that's my contribution. And then the other thing is that I, as somebody working in the diaspora, who is willing to come back in Zimbabwe, but anything which is happening with Zimbabwe right now, we are excluded. It is only for a few Zimbabweans who are ZANU-PF card-carrying people who are only allowed in the embassy, who are only allowed to come back to Zimbabwe and invest. So this is my observation.
Okay,
and
well,
then,
okay. Well, Chatham House has not done any events in partnership with the government, yeah. So I'll come to some more questions, and I see that Peter Fabricius has his hand raised. Peter, could you unmute yourself and ask your question, please?
Hello, Chris. Can you hear me?
Yes, we can hear you. Please
Good.
go ahead.
Thanks very much. And thanks to all your presenters for really interesting presentations. Could I just ask, maybe Busiso, but it could be to anybody, you're probably aware of the fact that the ANC has a delegation visiting Zimbabwe today to discuss what South Africa can do to help Zimbabwe. What would you suggest South Africa should do, should do, politically, economically, or any other way? And any of the panelists could answer that if they like. Thank you. Peter Fabricius from Institute for Security Studies, where I'm a consultant, and Daily Maverick, where I'm a journalist. Thank you.
Peter, thank you very much. And we'll come for a third question from Nicholas Oliver. Nicholas, please unmute yourself.
Hello, Chris. Good morning. Can you hear me?
Yes, we can hear you. Please.
Okay, so Nicholas Oliver, I head up business development for NMS Infrastructure. We are undertaking a major healthcare build in Zimbabwe at the moment. We're building hospitals and rural health centers around the country, and we're on site. One of the areas that we've had a lot to do with Zimbabwe over the last couple of years is fundraising for these social projects. And my question to the overall panel: Zimbabwe is losing the PR war. The news coming out of Zimbabwe that is seen by the banks, seen by the equity holders, seen by the DFIs is all bad. It takes an inordinate amount of our time and everybody else's time to bring them to the party because on a day-to-day basis, they're just seeing bad. How can we correct this? How can they see the real Zimbabwe? Thank you.
Nicholas, thank you very much. So we have a number of questions there. So perhaps Busiso, you'd like to go first in answering that direct question to you around how to engage a wider group of youth and young people in economic activity. And perhaps you'd like to go straight into also touching on what recommendations you'd have for South Africa. And then I'll come to Wisborne, I think, to also answer that question on what he thinks South Africa can do to support the informal economy, given the links there, and the infrastructure question, or rather the question on kind of how to portray a more positive view will come to Ethel and Dr. Pindariri. So Busiso, if you'd like to go first on engaging a wider group of youth and what South Africa can do.
Right. I think she brings a very important question. But we have to realize that, you know, it's not a static position. It is in flux. And you know, what we've been trying to do as formal private sector is to have inclusive models. And for example, in soybean production, we have programs that support rural communities, what is known in the Confederation of Zimbabwe Industries as linkages. Is it sufficient? No, not yet. This is the kind of programming that we are talking about. My colleague Wisborne is absolutely right. You know, the informal sector, as far as we are concerned, most of us, you know, what we are calling, you know, they're business people. I don't know, the issue of informal and formal creates an us and them. You know, they're just smaller businesses and larger businesses. And some of the people that we are calling formal actually trade in commodities like that we produce here in cooking oil. They take it into remote parts of the country. So to create these walls is not realistic, and to create the haves and have-nots is not always correct. You know, with regard to Zimbabwe. So a lot of the product, we are in the mass market. We produce low-end products, soap, standard soap that goes into the most remotest parts of Zimbabwe. And I'm just using that as an example. You could talk about cement, people in the construction sector. It's exactly the same. So Zimbabwe, unlike other countries, is still very much integrated. And it's very difficult to separate and say, you know, formal sector is benefited, but informal is not. Benefits in the formal sector usually end up in the informal sector. Do we need to be more intentional about it? I agree. Do we need to be more intentional about linkages? I think those are things that we must do, and she's right that we need help in terms of rural communities. But we've seen that in tobacco, 250,000 tons produced by small scale. And using this imperfect infrastructure, ICT infrastructure, 150,000 tons of cotton produced, smallholder, no large farmers, no large commercial farmers. We process cotton. So already we have these linkages that exist, but I do agree they need to be made more competitive, more efficient, and scalable so that those entrepreneurs in rural communities can also expand and grow. And financing that is value chain based and value chain linked for scalability. Those are, you know, concepts that we have adopted, and I think that there is some work that needs to go into there to improve, but they do exist. So that's my answer to that one. What should South Africa do? There's a lot that South Africa can do. 41% of our imports come from South Africa. You know, 60% of our exports are to South Africa. 80% go through South Africa. So these are big statistics. So there's a lot that South Africa can do in supporting trade with Zimbabwe. Of the stock of investment in Zimbabwe, the UK used to be a large investor, but South Africa is arguably, you know, now a larger investor in terms of, you know, ownership of business enterprises in Zimbabwe. So I think that there's a lot that they can do on the economic front, but I do think that, you know, a lot of the issues as Wabiti has raised, you know, are political, and our political leaders need to address those issues and make sure that we have an economy that is has equity and is growing and is vibrant. So I think there's a lot that South Africa can do, and even in assisting to stabilize the currency. These are important things. Some of us, and this is a minority view, but some of us have advocated that instead of using the US dollar, we should be using the rand because it's more practical for the reasons I've mentioned. The FDI from South Africa is very high. The trade with South Africa is very high. The imports from South Africa is very high. Fourthly, the diaspora remittances that come from South Africa are very large, and we have a large rand-based diaspora in South Africa. So it makes sense for us to maybe a wider use, not randization or converting out of the US dollar, but just allowing for wider use of rands in South Africa. So there's a lot, Chris, colleagues, fellow panelists, that I think South Africa can do, but I think it will start with some sort of political solution or context being resolved. Once that political context is resolved, I think a lot can cascade down to the economic, and we start seeing the growth that we all want to see, the stability that we all want to see. Thank you, Chris.
Busisa, thank you very much. So Wisborne, we'll come to you with that same question. What would you like to see South Africa do to help support informal economic actors?
Thank you, Chris. Maybe I'll just say two quick things. Number one, in South Africa, they have what they call NEDLAC. The NEDLAC is a social platform where the government, business, and labor, and other key players, including the civil society of South Africa, they sit and discuss socio-economic issues. And every partner or participant at that NEDLAC platform they express issues of concern in their specific constituents, and the government takes heed of that, and it all becomes part of the policy development systems of South Africa. At the end of the day, you discover that in South Africa, the informal economy is there, but for the South Africans, whether they are trading in the streets or wherever, as long as they are South Africans, because of now the policy system which protects them, they become safe and covered. They are not viewed as illegal traders. They are not criminalized by the law of their country. So this enables employment in South Africa coming from the informal economy to keep flowing without any challenges. Now coming to Zimbabwe, this is not there. And would want and would expect the South African government to share such notes with the Zimbabwean government to say, look, your economy is highly informalized. You cannot run away from that. This is what surrounds us. If we talk of cross-border trading, majority of cross-border traders, they are crossing into South Africa and bringing goods. Before the lockdown, a road port in Harare, Zimbabwe, one other time we did a survey where about 200 buses would leave the place going to South Africa per day. And when those buses go to South Africa, on average, each bus is carrying around 50, 60 people. If you calculate how many people will be going to South Africa to trade and bringing the goods into Zimbabwe. So we are saying these are the people who are even making the South African economy tick. Starting from Messina, when we used to know Messina, it was just a very dirty township in South Africa. But because of cross-border trade, which has been highly initiated by Zimbabweans, Messina has become a booming city. We cross over to Polokwane, we go even up to as far as Gauteng, Johannesburg. So the Zimbabwean people, they are very key to the South African economy when we talk of that line. So we are saying South Africa should talk to the government of Zimbabwe to stop criminalizing informal economic activities. They must have a poor approach in terms of policy implementation, incorporate informal economy structures at the table when they discuss issues of policy that affect their welfare, and also encourage the Zimbabwe government to speed up and make sure these are practical initiatives of setting up social protection and safety nets for workers and SMEs in the informal economy. Majority of these people, remember, they are women. And if we talk of the vulnerability, this time we are talking of effects of gender-based violence. During the lockdown, there was a lot of violence, gender-based violence, which took place. And these are key things which a government should look into and put up measures which can prevent such disasters from happening again. So this is what we would expect the South African government to do at most.
Wisborne, thank you very much. We are very much on borrowed time, but there is a question hanging that hasn't been answered around kind of the messaging and what perhaps are the positive messages coming out of Zimbabwe and how can they be communicated. So we'll go to Ethel for that. After that, I will take a couple more questions because I know that Dr. Pindariri hasn't had one directed at him yet, and there is one in the chat box for him. So we'll do that and then come to a close. I'll go to Nox Chitio for some closing remarks and then we'll finish. So I appreciate that we are running over time, but we'll take those and then finish up. So Ethel, if you'd like to talk about perhaps what are some of the positive messages and how could they be communicated?
Thanks. I think it's beyond positive messages. I think Busisa touched on some key productivity figures in as far as what's actually happening. And I think sometimes there's a tendency to take a very binary view to a country. It's either good or bad. There are a lot of people who are doing a lot of good and honest work and who are being productive, despite all the things that need to be improved. And I'm not minimizing any of those things at all. I think I made it quite clear that we have to improve a lot of things as far as our competitive and productivity goes. But that's not to minimize at all a lot of the good work that's being done. I think the challenge is getting that information known and shared. And there has to be a more balanced engagement and reporting around key issues. We know that bad news is more sensational than good news. And I think that's really the challenge here. Not to say the bad news is not happening, but to say that there's a lot of very good work being done. There are a lot of people who are working hard, who are working honestly, and who have been able to keep this country on its feet. Wisbon spoke quite at length about the activities of the informal sector. And I think that message and what the informal sector has been able to do to keep this economy going, the extent that it's gone, is quite big. So I think a big part of it is just intent around seeing that there is a good side.
Ethel, thank you very much. So Dr. Pindariri hasn't received a question, but there is one in the chat box for him from Simon Rowlands, asking to briefly comment on the prospects of the political resolve to pursue disciplined fiscal policy. So the question there around fiscal policy and I guess pursuing fiscal discipline. So Dr. Pindariri, if you'd like to deal with that.
Thank you, Chris. Let me say that macroeconomic policy management, good macroeconomic policy management requires working institutions and good institutions. So I have seen a number of questions being asked by participants are to do with institutions. So institutional management and strong institutions are very important and critical for Zimbabwe in order to move forward. Yes, we can see we have an improvement in terms of fiscal management and also in terms of even monetary management. But still we need strong institutions. We need to build confidence because the issue is about confidence. So as Zimbabweans or as those outside as well, those who we need you, we need everyone, all Zimbabweans to come together, work together as a team, get rid of or try to avoid this polarization issue, because the major issue that we are facing is polarization. So we need strong institutions come together as Zimbabweans, work together and try to make our policies work, because otherwise if we remain polarized, we will not go anywhere from my point of view. Thank you.
Dr. Pindariri, thank you very much. We are going to draw to a close, so I do apologize for those who haven't had their questions asked. I will share the questions that have been put into the chat box. They all get collated and I will share them with the panelists afterwards. So those of you who have put questions in there at least know that they have been seen, or the points you were trying to raise have been seen by the panelists. And also apologies to Nicholas Oliver, Patrick Smith, Stephen Kubase, Thomas Stephen, and Simbarashu Chikanza, who all have your hands raised. I'm very sorry, but we are now out of time. Before I hand over to Nox Chitio, just to make the closing marks, I personally would just like to thank our panelists today, David Mbe and Nox Chitio. David, our supporter from Konrad Adenauer Stiftung, and my colleague Nox, who opened up, and then our panelists, Busisa Moyo, Karen Pindariri, Ethel Kuya, and Wisborne Malaya. Thank you all very much. And I'll hand over to Nox to make his closing remarks. Yeah. So Nox, over to you, please.
Thank you very much, Chris. And thank you to all our panelists for some really outstanding presentations. I think, like most of you, you know, I've listened, watched, and I've learned, and I think we can all say that. So we are very, very thankful to all our panelists. One thing I just would like to say very, very briefly is just to clarify the point that Stanford raised, which is I think what he was alluding to is in 2012, we came together as a diaspora collective, irrespective of politics and so on and so forth, to assist our Zimbabwe Olympic team and Paralympic team and host them here in London. So it was in that context that we all came together without politics, without not worrying about anything else, and we worked together as a collective. And again, talks about what can, Dr. Pindiri was saying that when we come together as Zimbabweans and put aside differences, then I think that is how we move things forward. And this also speaks to what our speakers were talking about as well. But we are very, very grateful to all our speakers for making the time. And I think what is shining through, people spoke about the challenges, the opportunities, and so on. And I think for me, two things really have shone through. One is the Zimbabwean can-do spirit, which has been much spoken about, but we're seeing it here as well. Zimbabweans, we have the can-do spirit and incredible resilience to get things done no matter how difficult. And really, we appreciate that spirit. The second thing, again, is that if we work together as Zimbabweans, regardless of whatever politics, I think is not neither here nor there. I think what we need to do is to work together, join the dots, and if we can do that as Zimbabweans, then we can move the country forward, in terms of economics and in terms of things. But beyond that, I will just say a huge thank you, to all of you who have participated. I've seen some of the comments, very, very interesting comments, very useful comments, which we will take on board, which our presenters will take on board. So again, thank you very much to all of you. And as we say in our culture, to not end, thank you, and look forward to keeping the conversation going, because this is a process. We look forward to staying engaged on Zimbabwe, with Zimbabwe, and so this is a process. We will continue to engage. So, Chris, again, thank you to everyone.
Knox, thank you very much. And as Knox said, this is a process, and Chatham House will be hosting another webinar in partnership with the Konrad Adenauer Stiftung again later in the year. So there will be a follow-up to this discussion, and we very much hope to see you all there. We will let you know the details. So my final thing to say is a big thank you to all of you who attended, a big thank you to all of the panelists.